Hey guys, welcome back to my channel. And in today's video, I'll be doing the top 5 stocks to buy for the month of May. So these are 5 stocks that I own. So starting with Visa, as you can see, the how it's been doing. That's how much I own, $914.66. This is my biggest position, 3.9 shares. As you can see, the payout ratio, which is very low, one of the lowest I've seen for a dividend stock, 25%. As you can see, their earnings, they've been doing pretty good as far as their earnings. They have a huge market cap, almost $500 billion, and $30 billion in revenue. What I really like is their margins, which it doesn't show here, but you can look it up on the internet and see that their margins within, I think, 30 or 40% or something like that. They're a credit card company, so their margins are typically pretty high. So our next company is going to be Qualcomm. So this stock is still fairly cheap in my opinion. It's still down. Let's see. It's still down a little bit from its all-time highs. As you can see, I own $243.64, about 2 shares. It's very small positions. All these I'm trying to build out into bigger positions in my Roth IRA. As you can see, some news. It pays about 80 cents per share. It only pays about 30% of its earnings in the form of dividends. Its earnings are kind of down, but that's not too concerning. As you can see, some information about Qualcomm. This is all done on the Fidelity app. You can download it right now in your app store. Market cap $132 billion, 28. Yeah, it's much smaller than Visa, but it's still decent size. $42 billion in revenue. They produce some nice revenue. All of these companies I'm looking at today are fairly cheap and they have decent margins. So you should check them out. So our next company is going to be Taiwan Semiconductor. Now this is the first company that I've invested that was overseas, because I was against investing in overseas companies for a while. I was sticking to domestic companies because I understood them more. And so when you do overseas, it's a little bit more risk, but I think the risks are well worth it in my opinion, because you find some great companies out there. I'm not talking about like small cap stocks or anything like that. These are well established companies that have been around for a while. And they have a great balance sheet. As you can see, very low payout ratio, 35%. Earnings, they seem to have a low Q1 earnings historically. So that's something to look out for. Some information about Taiwan Semiconductor. You know, it sells integrated circuits and other semiconductor. So information technology sector, 10 billion market cap. Revenue about 73.69 billion. Just a beast of a company if you want to get into that sector. Our next company is going to be one of my favorites, which is CVS Health Corporation, and it's sitting right there at that 52-week low, as you can see, like literally right on it. Like you can't get no better deals in recent years in the stock than that. It's a very small position. I just started it maybe a few months ago, $388. Their payout ratio is kind of high at 77%, but I believe in the future they're going to continue to increase their revenue and their profits as they advance their healthcare side of their business. So our next stock is going to be Rowe, and this is also another one of my favorites. This is a virtually debt-free company, which I love, relatively close to that 52-week low. Not quite at CVS level, but it's pretty close, as well as it's like my next biggest position, about 6 shares I own. Some news about Rowe Price. I chose this over BlackRock just because of the the balance sheet, and as far as the valuation, I thought it was relatively cheap. Both are great companies. Some information about Rowe Price. It's an investment manager, retirement, things like that. Market cap 25.18 billion, very small company, but still very well known. Revenue about 6.49 billion. Which, hey guys, so I just want to talk about my overall reasons for investing into it. Just to sum it all up, these are my 5 companies that I own in my Roth IRA. As you can see, the share count, as I stated earlier. My top 3 favorites are Rowe Price, CVS, and Visa. I love all of these companies, but those are like my top go-to ones whenever I want to invest money into the market. I really go for Rowe or CVS. CVS I'm trying to build out more. It's still pretty small position in my portfolio. Rowe Price, I want to build that out some more. They're just great companies with great balance sheets. Some of the things that I look for are very little to no debt levels and low asset to liability levels, as well as great profit margins, increasing dividend growth, and increasing earnings, increasing revenue, things like that. Things investors normally look for. But I also look at the industry that they're in and how they fare in the future. I'm really bullish on the credit card industry. People are not going to stop making payments and paying for things digitally or electronically in the coming future. They're not going to stop needing semiconductors and chips that go on phones and computers and things like that, which why I'm bullish on that, as well as the healthcare industry, which CVS is in. I'm very bullish on that. People will always need prescription drugs and affordable healthcare, things like that. So those are very important sectors, I think, that are penetrated. And I look for long-term companies that I feel that are gonna be around for forever. So I look like far into the future. I ask myself, is this company gonna be around for the next, 30 years, 50 years or so? And if the answer is yes, then it's a no-brainer. But if the answer is no, I try and keep looking, because there are many options out here, like Johnson & Johnson, there's Home Depot, Lowe's, Lockheed Martin, which is a beast of a company. But check those out.